Welcome back to Nodus Group TV. In today's episode, I'm talking about the COVID-19 property part 2. So in the part 1, you might have seen earlier, I was talking about everything is normal, but now it's not. So that's the new normal at the moment. So the first part I'm going to talk about is residential tenancy and landlord situation. So the new legislation have come in. I'm going to put the link below in the description. Also, in the whole summary of it, basically what's happening is like if you're a tenant out there who's got difficulty in paying rent, the number is if your income is dropped by 25% or more. In that case, you need to produce the evidence of the pay slip, also the bank statements, and then you need to send it to your agent, and they will be talking to the owner and to have the rent adjustments. But that does not mean, let's say for example, if your weekly rental is $400 and then you want a reduction in the rent, and then now for time being you're paying $250 or $300 a week, but the balance of it is still payable and it's still due at the end of the pandemic or at the end of this situation, or also like when you're back on your job and now you're getting paid in full amount and everything else. And by not paying that amount does go on your tenancy records, which will make it a bit difficult for you to rent in the future. And if you're a landlord out there and if you've got a mortgage, it's worthwhile to talk to your bank and then have that payments either reduced, interest only, or frozen for some time as well. But that is something you need to talk to your financial advisor or the bank or a broker, but those options are there for you. As you can see from the thumbnail, I just got off the phone with very intense buyer negotiation. So you might have seen in there, like, is property market going to crash? Now that is the question we're getting a lot at the moment in terms of like how property market is performing, what's in the outlook and what's happening. Firstly, I just want to let everyone know that real estate offices are functioning with social distancing laws. Also, sales and rental inspections are happening under the government guidelines. And now coming back to the question of market crashing, see, one thing a lot of people mix it up is like real estate market and the stock market. So the way stock market works is they work on future anticipation of the business, also the economic conditions, while the property market works on the strong or weak unemployment or employment. So if the unemployment rises between 10 to 16%, which a lot of financial modeling is suggesting, that will have an effect on the price, which is prices will go down. Majority of the unemployment numbers are in casual and part-time labor force, where most of those people are not in the home ownership, as per the data. Also, when you look at the news articles, they look and report as a property market in general across the country, which includes off the plan, house and land packages, commercial property, residential. What I want to talk about at the moment is residential properties in the mid-range, close to amenities in established areas, especially in Sydney, Melbourne Metro. They'll have the least effect. In fact, we can see that now the demand for established housing, close to amenities, close to schools, transport, in the established areas is still relatively strong. I'll be reporting the April statistics later in the month, but the decrease what we've seen in that marketplace is about 5 to 7%, as you can see in the pop-up screens. Everyone's predicting like 10%, 30% market reduction, but we haven't seen that because we work in the established housing. Now, based on this information, you can make your own judgment call if the market's going to crash or not, or what's going to happen. Now, the final question, should I be buying during pandemic? Look, firstly, if you've got a pre-approval and now you are in the process of looking and securing a property, I will highly recommend to speak to your bank and a broker again. There are some changes in the lending markets I've seen in terms of the bank assessment criteria and everything. So if I was looking, I'll definitely go back and talk about that, like if your pre-approval is still valid or for how much amount. So definitely I'll check that. But if your job is secure and also your deposit and lending criteria haven't changed, you're in a box seat to secure a property at the moment because there's not much competition. But if your job is not really secure or you're uncertain about it, I'll suggest to hold off buying. Now, keep the questions coming. I'll be covering a couple more questions in the next video, which is end of April statistics, and also answering more questions. Once again, thank you very much for watching, and please subscribe to our channel. That gives us motivation to produce more content. Thank you.